Hi all, this is chapter 5, big chapter this one, big chapter because when I say big chapter, not difficult chapter, but it's so easy to test. It's something they love testing. This is disposals. So what I'm going to do is, again, you have to do questions, but I'm just going to show you the theory. And once you do this theory a few times, it becomes normal, right? Disposals, let's just be rational about this. Forget the T accounting, so at least we know what we should arrive at. Say, for example, you have a car worth £10,000. And you are depreciating this car, let's just say 10 years, straight line method, right? So that means that's £1,000 a year. And let's say the car has been with you for 3 years. You've done straight line method, so that means, right, that you have something that looks like this. Cost, 10,000, accumulated depreciation, 3,000. Or in your mind, you know, well, in your mind you can see straight away this car is worth 7. And you sell it for 5. Well, if it's worth 7 and you sell it for 5, I'm sorry, you've made a loss of 2. That's just what it is. That's just what it is. Now, what we need to do, the question, what we're really trying to do here is say, well, how do we deal with this in accounting? How does the double entry work for dealing with this disposal? Well, it's a disposal. You're getting rid of the car. The car will no longer live in your statement of financial position. Right now, this car is under your non-current assets, as this is as well. So your non-current assets in your balance sheet has something that looks like this. Non-current assets, 10,000, 3,000, 7,000. That's what it has right now. And you don't want this. You want to take this out. So what do we open up a disposal account? This is only temporary. This disposal account does not exist past the process of trying to work out what the disposal actually is. And in double entry, we don't cross things out. So we do, to get this out, I must therefore credit cost and debit disposal. Debit accumulated depreciation and credit disposal. This thing is no longer in my, this asset in particular is no longer in my financial statement. So I have a disposal account. So what do I now do? Well, I said to you that you sold this thing for 5,000. Bank. So watch this over and over again so you know exactly, and just do every single question like this. You sell it for 5,000. You receive 5,000. And there's 5,000. I mean, let's look at this. This thing over here, 10 and 3. This technically is 7, isn't it? I mean, I could have put 7 only. So it's 7. I'm trying to compare 7 and 5. That's what I'm trying to do. So I now know my loss is 2. So I have £5,000 in the bank. So how do I close this whole thing? Well, I recommend you should open up another account called loss on sale in this event, because you've lost, right? Because how do I know you've lost? Well, you had something worth 7. You've only received 5 for it. Well, if you've lost something, that's the 2. And that's the 2. That's the double entry. Debit, loss on sale, credit. As opposed to bringing it down, because it's really an expense. So we're not bringing anything down. This is an expense account, technically. So it has to get transferred. I mean, or you could just write transfer to the income statement, and you do that. And then you'll still have to, by doing that, you need to recognize the income statement as a T account, so you can write loss on income, loss on sale in the income statement. Or why not just do this first? Credit the disposal, debit loss on sale. So you now have this as an expense. So you know, you can see physically you transferring it to the income statement of 2, and then you're done. Right? So that's how you do this. You must go through this process of finding out what the cost is, finding out what they're getting the cost and accumulated depreciation in, putting through the bank. I mean, this could have been a gain. I'm just going to do this just do another one very quickly. There's 2 parts of this video. This is the first one. So I'm just going to do a gain. So you have the cost, and this is the accumulated depreciation. I'm going to go again with 10. Here I'm going to go with 3. And then I'm saying this time you sell it for, let's say you sell it for 9. Well, again, this is my disposal. Take it out. 10, 3, 10 here, 3 here. So it's 7. Bank, you receive 9 for it. So debit bank, credit the disposal. You've made a gain of 2. So you have 2 here, and then you have here gain on sale, 2,000. I mean, you can see it's on the credit side. It's income. All disposal accounts always close. 12, 12. Done. Closed. Right? So what do we now have? We have 2,000 income, and we're there. Right? So, and that's how we deal with this. That's how we deal with disposal. So you need to do all, I mean, the TYUs are very good for this. You can do as many as you want. And it's very healthy. I'll do the second part of the video on part disposals. Okay, great stuff. See you then.